All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and we got a fun one today. Dylan's going to break down the various streaming companies out there for us. You've been looking at these, Dylan?
I have. I was trying to justify how many shares I have in Fubo to see if it's worth it.
Yeah, I get it. The time to do the due diligence is usually before you buy the stock, though. I'm just
That's fair.
You're aware. Be clear. It's that's my preferred thought process, at least.
Fair enough.
Well, we know rockets make things go up.
Yeah, that is how that works.
Yeah, exactly. I mean, streaming is definitely a very interesting market right now. It's growing dramatically, and like this was an interesting graph that I found where they were looking at streaming by like age demographics, and as you look at it, as towards the left side of the screen here, we got like younger folks. Younger folks are dropping off from traditional subscribe like satellite and cable at a faster rate than older folks. If you kind of see like this is the average, look how much more like the young folks are dropping off. You kind of see it flatten out a lot more as you go up in age.
That's over the course of 6 years, huh? That's ridiculous.
Yeah, it is
Big
very
drop.
much startling, I think. So it's a trend that is real, and there's going to be a lot of money to be made within this trend. It's just a question of figuring out who amongst them will be the winners, and that's what like Dylan's trying to do with us today. This is kind of one thing that's interesting. So we're going to talk a little bit more about like what each streaming service is kind of like a little added twist or their unique niche within the streaming world is. But Fubo, one of theirs is theirs is predominantly sports related.
Yep.
And this is a quote I took from an article I thought was kind of interesting about what kind of is keeping people on traditional, cable subscription, media and connected TV, as they call it. But sports was definitely part of it. Sports and news, which is something that Fubo has to offer. So it's an interesting play from that standpoint.
Yep.
This is a brief breakdown of all the various subscriber counts as of it was later on 2020, towards the end of 2020.
These are the big six that we're going to be looking at.
Yeah, exactly. Dylan's going to put them head to head for us. All right. I don't know if you want to talk about Dish.
So it's more echoing everything that Vinny just said, but here's Dish, which is also a publicly traded company. So they own Sling. So we're going to go over like their subs, their growth, that kind of stuff. But Dish, they're just slowly dying, right? So they were at what is that number of subscribers, millions, around 14 million. Now they're chilling at 10 over the course of 6 years, and it keeps on getting more dramatic as they go down. So
yeah, same with all the traditional media outlets. As a DirecTV shareholder, customer, I have definitely thought about getting rid of them from time to time. But
if you don't switch to at least Hulu Live or something,
we have all the streaming services pretty much except for Fubo. But it's a little crazy.
If you have Dish, that does not make sense to have.
No,
you should not have both of those.
Yeah, we have DirecTV.
Oh, there you go. So this is Comcast. This would be your DirecTV, right?
No.
So they're also this is Xfinity.
Yeah, DirecTV's AT&T. Yeah.
Yeah, this is Xfinity. Oh, AT&T is worse. You're going to see that one. So they lost another 250,000 in Q4 2020 because this actually stops at Q2, but they're essentially losing like 5% of their subscriber base a year.
Yeah.
Great.
Definitely noticeable is this change in like the angle of the graph here as we entered COVID, basically, and you just start seeing people just dropping off.
Just completely tanks.
Yeah.
So I know this can be a little bit of a confusing slide, so I'm going to try to go over this fairly quickly. But the six that I was looking at are Fubo, Sling, Hulu, AT&T TV Now, which is also the new name for DirecTV, YouTube TV Live, and Philo. If you look at their packages, so Sling TV, they have multiple different packages. After looking at them, it really just looks like it's another Dish, to be honest. I don't know if just Dish didn't learn or what, but I could not find a more confusing way to line up different packages.
Yeah.
You have Sling Orange and Sling Blue, and you get to decide which package of channels you want, and they're both clearly missing stuff that everyone likes.
I think that's the idea, is they force you to buy both.
Yeah, but then both doesn't have everything either. So it's, what are you buying it for?
I know.
And then, yeah, you can't have multiple streams with Sling. You do get a DVR 50 hours. There's nothing special about them. The big issue is, looking at Q4 2019 to 2020, they actually lost subscribers. Then you look at Fubo, Hulu Live, and YouTube, and they all went up like a minimum of 40% or 30%.
Yeah.
Probably actually more than that. So that's just not great. And then you look at AT&T TV Now, they're kind of imploding on purpose. Because Vinny, you want to talk about that one?
Yeah, I think they're really trying to they decided that HBO Max is going to be their streaming product, and they're just kind of wholesale on that. They've offloaded. I can't remember if it was a controlling interest, but they sold part of the DirecTV business. So they're getting away from that. They're more interested in the content side of the thing, with Warner Media and HBO. Now being like their entry in this market, and seems to be doing relatively well.
Yeah, they're completely imploding, but I think that one's on purpose.
Yeah, on that side, they're doing well. Remember, I don't know if you saw this, they announced that all of their major blockbuster videos, basically movies this year, are going to be released on HBO now.
On HBO.
Same time, yeah. So it's an interesting play, and it seems so far that it's working out well for them.
Yeah, it looks like they're trying to kill AT&T TV now. HBO wouldn't really be a competitor of Fubo, so I didn't put that one in here. Mm-hmm. But you look at those, Philo also is, it's $20, the 60 channels. There's only like 3 channels I would ever watch. Obviously, this is an opinion, but I'm looking at all the reviews, and it's essentially no sports, nothing fun. I tried to get their numbers, but they're not publicly traded, so I couldn't really find direct numbers, but they did look like they increased, but not a lot. The big 3 are the Fubo, Hulu, and YouTube. They're all $64.99 a month. They all have available add-ons. They all get multiple streams. YouTube has an unlimited DVR. Fubo's 250 hours, and Hulu's 50. Mm-hmm. Fubo has the most channels, which I was surprised by, like a large margin.
Yeah.
So that was kind of cool.
Interesting.
More sports, obviously. They're all about sports. So if you're an NFL guy and you don't have NFL package, that's really the only way that you can go.
Yeah, and I mean, NFL package is like $360 a year. It's kind of crazy. I've done it a couple of times, but it's like, whew.
Yeah, it's a lot. It's definitely a lot. I had Hulu Live and I canceled it because I thought they were advertising how much sports they got. At least football. They don't. It was like a game.
So like B League Brazilian soccer, they got that.
Yeah, I mean, the games that they would have, it's just like there's so many football games on a week. I want more than one. And it was always like one that sucked. So let's go to the next guy here. So here's specifically Fubo. You can see I did from 2017 to 2020. You can see how much they're increasing. They're kind of still on exponential growth. So 73% year-over-year increase for subscribers. Their average revenue per user has tripled since 2017, which is good.
Yeah.
Their advertising revenue is still fairly abysmal, but it is, I mean, it's still going up 50% a year, so that's good.
Yeah, I know it was over 100%, I thought, last year. Oh,
it was overall. It was overall.
Yeah, it was like 120% or something like that growth last year, which is very impressive. You're definitely starting to see a shunting of advertiser dollars towards, non-traditional, I guess, media outlets, and I think Fubo will definitely benefit from that, especially as they grow and like establish some sort of, kind of market penetration status there.
Yep. So to me, that was quite impressive because we're losing, it's like 1.4 million subs from Dish and like Comcast and stuff, like a quarter or something like that. It's something ridiculous from all of them total. And they're going somewhere. And it looks like Sling is not holding on to them. And Fubo, Hulu, which is, Hulu's not publicly traded, neither is YouTube directly.
Yeah.
So Fubo is the only one that is directly, so that's why I was kind of a big fan of it. It's definitely going to overtake Sling, I would assume, fairly quickly. But
Yeah, you're starting to see a not necessarily a winner take all, but a winner take most mentality amongst the streaming players. You're seeing a little bit more consolidation, I think. There's definitely like a little bit of a subscriber burnout, like having, half a dozen streaming services gets to be a little expensive. You might as well just have cable at that point.
right.
People are going to, pick and choose over time, I think, a little bit more carefully which one receives their subscription money. And Fubu is positioned well to benefit from that, I think.
Yep. All right. Talk
So
about their weird financials, Vinny.
I wouldn't say weird. They're a very early stage startup. Like this is kind of what I expect. It's much harder to value a company like this using my traditional kind of like value metrics. So, this is their income statement from this previous 2 years here. 2019, I didn't even honestly really dig into very much. But if you look at 2020, they did have about $200 million in revenue. Over 100 million of that was in the fourth quarter alone. Fubo's definitely established some interesting seasonality, as you imagine, being a sports-related content, offering NFL through the local networks. You're going to see a lot more people on Fubo in the third and fourth quarter. So it's a very season.
I think they're actually projecting a subscriber loss for the first quarter.
Yeah.
Actually, I didn't put it in here, but Hulu also lost 100,000 subscribers in quarter one. But it's expected. They're all kind of seasonal.
Yeah. I mean, it makes good sense. Now, what's interesting looking at this income statement here is, they look like they lost $480 million, which is, considerable number when you're talking about $200 million of revenue. But if you break into the sub items here, as I was talking to Dylan, this impairment of intangible assets and goodwill, not really a cash charge, because basically they're just writing down the premium they had paid when they acquired other companies. Same thing with the depreciation and amortization. That one's a little bit more questionable. Some people will include that, but it's not really a cash charge. Everything else here is pretty much cash that they did have to outlay. So my number for an adjusted, loss basically for the year of 2020 for them was like about $180 million instead of this $480 million. So, far, still not great, but far more reasonable. And the reason why I did that calculation is that when we go to the next slide here, you can look at how much they have in the bank account, basically, how much of a runway they have. So they're looking at current assets of $156 million, meaning they have, in terms of cash on cash expense, they have greater than 9 months of runway, which is reasonable for a startup. They're not like running out to the ATM right now to take out a bunch of money that they and have a hard time paying back. But they still will have to raise capital at some point, probably, whether that be through debt or additional share offerings. That's always the question, and neither of them are particularly accretive to shareholders in the short term, at least. Long term is you have to do to survive, right?
Yeah, you would think that because most people don't know that it's seasonality for them to lose subs. So you'd think that after quarter one, when they report, I think they report in May. I'll have to double check.
May 15th, I believe.
Yeah, I thought so. They'll probably go down a little bit, and they wouldn't want to offer shares then. I would assume they do it like quarter three, where they typically pick up like a gross amount, and then because that's when their stock price will be higher.
Yeah, that's a good thought. If you were the CFO of Fubo, that'd be make good sense. So, have any other closing thoughts here?
No, that's pretty much it. It was fairly interesting to look at all the streaming services. I am heavily invested in Fubo. I think they're going to be pretty solid just because they also have a lot of soccer outreach. They started as a soccer platform, and then they just pivoted to everything else. But more importantly, they have the sports book, which everyone's waiting for.
Yeah.
Quarter three, you can start gambling.
I think it's very interesting. Obviously, it's a industry is going to be heavily regulated, so they're going to have some challenges in that aspect. But kind of gamifying sports on TV where you can, watch sport and then bet on it. Like, it depends on how well they get with the integration. Can you imagine just sitting down and see someone about to kick a 60-yard field goal and you're just like, you know what? I'll put $5 on that. I can only imagine.
It can get ridiculous. Honestly, it could be so cool. Like DraftKings all this online gambling could be like a whole new thing. Like imagine because I went to place a bet on I think it was Mayweather versus Conor in a boxing ring. It was a nightmare. It was shady. Like it was. I had to go to these weird sites.
Yeah, if it's registered on the Cayman Islands, it's always a little questionable.
Yeah, didn't like it.
But yeah, it's I think they have a lot of potential. It's not a company that, the real question I think is how much of your portfolio you want to like expose to it. Like there's definitely some potential there, and I like their story. I think they're going to grow, but it's definitely years away. Like you might have other entry sites between now and when they become truly profitable, where it'll be a better time to buy the stock.
Oh, for sure. Yeah, absolutely.
Yeah, exactly.
I'm selling covered calls on them just to lower my entry. So
yeah, that's a great strategy. Actually, we should start doing some option trading videos at some point. But yeah, it's a great one when you're already in the position to kind of like lower your cost basis a little bit.
Yeah.
Yeah.
All right.
All right. Well, thanks for tuning in, guys. We'll see you guys in the next one.
Thank you.